Hi, so today I'm going to be talking about the game theory behind the recent tax avoidance scandals that were leaked in the Paradise Papers. They were leaked to a German newspaper in November 2017 and exposed a lot of high profile tax evaders. So I'm going to use the example of two famous people that were caught up in this scandal. So I'm going to use the example of Bono and Lewis Hamilton. So to simplify our game, I'm going to assume that these are the only two rich people in all of society, meaning their tax payments would make up a very large percentage of the society's overall tax revenue. And we also assume that they only have a choice between paying all of their taxes or none of their taxes, no in between at all. So, if they both pay their taxes, they each benefit from higher quality public goods. For example, the government could afford to make sure there are no potholes in roads, but in doing this, they each have to pay a lot in taxes. Then, if only one of them pays taxes and the other evades taxes, there will still be the public infrastructure, but of a lower quality. And then the avoider gets to keep all of their money, so they are much better off. And then, if neither pay any taxes, they get to keep all of their money. Both get to keep all of their money, but there's very little money for the government to spend on public infrastructure. So, based on these assumptions, we can make a game that looks like this. So, each agent looks at the outcomes when choosing what to do, and as we can see, there's quite a clear dominant strategy. So, for Lewis Hamilton, if Bono is paying his taxes, he should evade taxes because his payoffs are either 7 or 5, so he wants the 7. And then if Bono is evading taxes, he also wants to avoid taxes because he's choosing between 2 and 1, so he wants the 2. This means there's a dominant strategy for Lewis Hamilton to evade taxes. And then as a symmetric game, there's the exact same dominant strategy with Bono, which causes a Nash equilibrium here. So they each have an incentive to always evade taxes, so they won't pay taxes at all. So this gives us a pretty bad problem because in terms of the overall payoff, so society's payoff, they're going for the worst point for society by getting an overall payoff of 4, whereas if they're both paying taxes, the society's payoff is 10 because it's 2 people getting 5. So we need a way to shift the Nash equilibrium to the socially optimal outcome, which is this outcome of 10 where they're both paying taxes. So we can do this by punishing people for avoiding taxes. If we give people a big fine for avoiding taxes, then the payoff for doing so will drop. The new payoffs are here in red where we've introduced a fine for evading taxes. So now the Nash equilibrium is here at 5-5 where they're both paying taxes because we've created an incentive for them to pay their taxes and a disincentive to avoid taxes. So here they're both paying their taxes and we're at the socially optimal level. So this is, theoretically at least, the strategy to get everyone to pay their taxes. Obviously it doesn't work in practice all the time. So this principle can then be applied to all public goods. So streetlights, defence, police, roadworks, all of it. Because of the fact that we have an incentive not to pay because someone else will and will still benefit. And this is called the free rider problem. And it's a really major thing, and this is why we need government intervention into public goods, so we can shift the Nash equilibrium to give everyone an incentive to contribute.